Hello, everyone. Many day traders are thinking that the order flow is not necessary or they're trading. So, where is the truth? How much helpful the order flow really is? In real life, I will show you some nice examples and principles of how it works and what to expect, all coming from an everyday trading experience of my trading community. If you only trade with the candlestick chart and have problems to become profitable, this video can completely change your view of the market. If you will have any questions after watching, feel free to ask in the comments, and you can also get a free advice and help with your trading from me in the free version of my Discord community. Link below, limited to 3 requests per week. Let's get started. You might like other of my videos about day trading. It goes from interesting tips and setups for beginners to more advanced techniques for experienced traders. And here are my playlists. Thank you very much. Now back to today's video. In today's video, we will talk about these topics. What is the order flow? Why is it important? How we use the order flow with real-life examples, and what the order flow can and cannot do for you as a day trader. So what is the order flow? There are more definitions and a lot of theory you can find everywhere on the internet. So let's talk about what the order flow means in a more practical way. For me as a day trader, trading ES and NQ, the first important thing to see is where the bigger limit buy and sell orders sit in the order book and how the market reacts to them. And I have heard many traders say that it is not important because there is so much spoofing, it has no value. And I agree that spoofing is complicating things by a lot, but there still is a lot of value in that piece of information. Let me show you a few examples of how it works. And what do we see at this picture? It is the heat map, and the colored stripes are limit buy and sell orders. Every order sitting above a current price is a sell order. All orders under the current price are buy orders. We can also see the volume transacted as dots, green for buyers, red for sellers, and they all are market orders. It might look very exotic for someone new, but it is very simple. Let me guide you through this example. At the point number 1, there was a bigger limit sell order as someone wanted to short the market, but the buyers were stronger and pushed the price higher. It was probably an institutional trader. And do you think he will get stopped with a stop loss like a retail trader? Not at all. We get to the point 2. An even bigger sell order is getting filled. It is so big that the momentum fades away and the price moves a bit lower. Look at the dots. Buying volume is slowing down and first sellers are appearing. Point number 3 is the last attempt to push the price higher, but another sell order has got filled, and there are less buyers, smaller dots, than at the point 1 or 2. Few moments later, are more and more sellers coming, and the price is going lower to the point number 4, which is a crucial moment of this example. You can see that as we approach this point, limit buy orders are appearing. And guess what? Exactly at the price where the first seller got filled, so he can get out of the position without a loss. And sellers at the point 2 and 3 can stake their profits. We cannot see the identity of each market participant, but let's imagine it would be the same seller at points 1, 2, and 3. Would mean very nice gains for him. One more important thing. When we look at the volume transacted between point 1 and 4, we can see more buyers than sellers. That makes the probability even higher. That point number 4 could be the bottom, and we can go long here. Our stop loss can be very thin, about 1.5 to 2 points, because if the price doesn't stop around these buy orders, then the setup is not valid anymore. The only problem could be the speed. It was a very fast move, and you would have probably only 10 or 15 seconds to get in around the best price. Many setups are like that, but there are also setups where you have more time, usually around 1 minute. So it is your choice if you only take these lower ones, or if you set your hotkeys the right way for these faster setups and get more trading opportunities. When you look at the candlestick chart, you would have no idea what is really going on under the surface and wouldn't be able to catch this trade. And this is what the order flow can offer you. More setups than the chart and faster, more precise entry and exit. And what are the cons? As you have seen, many setups are very fast and it is normal to miss a good portion of them. There is a risk that you build some frustration over the time and start to overtrade. Next problem is also psychological. You can, for example, spot a reversal in the order flow, just in the middle of a big red candle. Would you be able to go long in this situation? You also have to consider that the order flow doesn't show you how every setup will play out. Sometimes there is just nothing to see and to support your trading idea. There is also a learning curve, and you will need to train your eyes before you can benefit from it. But all factors considered, it is really worth it, and a candlestick chart alone can't give you so much information and edge. If you find this video helpful, please hit the like button and subscribe. And if you really mean it with trading, you can join a free version of our Discord community, where I share more setups and education, and you can ask me to get my in-depth analysis on your trade or setup for free. I will choose 3 of your questions every week and give a public answer everyone can see and benefit from. Just click the link below in description. Thank you very much and see you next time.